Welcome back. Well, let's get some fundamental analysis going on all the stocks we just listed out for you. Siddhartha Khemka, the head of research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Good to see you. What about TCS's numbers? The stock yesterday came off the highs of the day. The tech index itself was lower. What is your reading of these numbers? And if the stock starts off in the red, will you be a buyer given the recent underperformance?
Yeah, morning, Nigel. Glad to be on the show, and the festive greetings to all of you and the panel as well as all the viewers. So I think if you look at the numbers, the top line was clearly driven by the India business and the sharp ramp up in the BSNL numbers. Bearing that, if you look at North America was down 1.7% on a Q-on-Q basis, which was a surprise. EBITDA margins were 40 basis points below our expectations, and PAT consequently was down 1.2%. So what we see is that growth was primarily driven by the BSNL ramp up, and if you exclude India growth, the overall growth was just 0.7% in USD terms. So that's a kind of a bit disappointing and mainly attributed to client-specific issues in the healthcare and some weakness in the communication verticals. What we have seen is that last quarter we witnessed significant shift in the client behavior, and especially in the US banking sector, the recovery has started taking shape, which is a trend that we expect it to continue. We expect Q3 could be again becoming a weak quarter. Q1, which is your Jan to March quarter, would be a very significant quarter for the tech companies, because that is a time when the budgets for the new year calendar would be decided in the key markets of US, Europe, and that is where I think a good sharp recovery could be seen because the interest rate cut would have had already taken place, and the budgets for new year, given the newer environment, that could take place. So what we are expecting is that in the near term there could be weakness, and hence any weakness could be taken as an opportunity to buy stocks like TCS, which we believe is a market leader, having a diversified presence, exposure to long duration orders, and its best-in-class execution give it a market leadership as well as the market premium that it justifies. So we continue to maintain our positive stance on TCS. We have a buy rating and a target price of 5,400, which is a very decent 28% upside. Nonetheless, as I said, near term, there could be weakness, and that would be an opportunity for investors to look into the stock.
Siddharth, hi, morning. Would you go out and buy Bandhan Bank today? Considering the stock has been an underperformer, this year itself is down 22-23%. Valuations relative to the rest of the pack are fairly okay at 1.1 times forward price to book. And now that key overhang of the MD CEO announcement is out of the way, and the street seems to like the new guy at the top. So would you go out and buy Bandhan Bank today?
Yeah, Rima, good morning. So yes, definitely. I think the news that has come in is very positive. Few days back, the company had also announced the Q2 business updates, which was pretty strong. And I think if you look at the business updates, Bandhan clearly stands out among the MFI companies where they are still reeling under the asset quality pressure, and Bandhan has clearly come out with strong numbers for the quarter. And with the new CEO being approved by RBI, that definitely removes a key overhang. Currently, we have a neutral rating, given that the overall asset quality is to improve. The business growth is yet to pick up. But I think today, with post the Q2 business update and this key overhang going away, view is definitely turning positive on Bandhan. They have been reporting good quarterly numbers for the last 2 quarters. Even Q1, we saw very strong numbers, and overall our earning estimates with a ROA of 2.2%, ROEs of almost 19%, and a valuation which is comfortable, much below some of its peers. It definitely makes sense to have a positive view on Bandhan.
Right. What about BSC? Good morning, Sid. What's the sense there? I mean, stocks moved up, but from what, 3,800 to 4,200 now. What's the sense?
Yeah, Prashant, good morning. So I think BSE continues to positively surprise us with the expected growth in market share. I was listening to your conversation. So yes, I think market share is something that people have not yet factored in, and it's difficult to say how traders' behavior will move. And hence that there is a reluctance from analysts to give out a number to that market share. But we have seen that with the Sensex and Bankex, they had gained a significant market share in excess of 20% in the derivatives. Now, with just two indices, the Nifty and Sensex being there, I think the market share for BSE in the derivatives will see a significant up move. Even from here, it could go up to in the range of 35-40% at least, and on a conservative basis, if not higher. And if you look at that, would be a big significant leg up for the overall growth for BSE. Overall, otherwise, also you look at the capital market data, things are looking up for BSE across its segments. The latest regulations are also supportive of that. The Star MF platform for BSE continues to report healthy numbers. And as I said, the key driver for BSE would be the derivative segment, where it continues to gain market share. And hence, I think the stock should do well.
We've got Siddhartha Khemka, of course, still with us, and we'll have the technical experts also joining us in just a bit from now. But maybe just sort of address a few other things before we move forward. I think we discussed BSE, we discussed, of course, Divi's with a pharma analyst. Bandhan Bank was another one. I just wanted your thoughts on two or three names, Sid, if you have coverage, if you look at it closely. Yesterday, you had these shipbuilders, Mazgaon, Garden Reach, going up 8-10%. They'd come off their recent highs by 30-40. So that is one. Then the Tata Group companies, Tata Investment Corporation went up sharply. It's like a amalgamation of basically holding. It's like a, for the lack of a better analogy, like a mutual fund, but of course differently structured. With Tata Sons owning about 73% in the company, and Tata Chemicals went up sharply as well. So yeah, I mean, four names your way. Go on.
Yeah, Prashant. So I think within the PSU defense names, it's more of a recovery trade that is happening after the sharp correction in some of these names over the past couple of weeks, about 30-40% correction. There seems to be some interest coming back, and some of these players have been consistently winning new orders. Now, the only challenge with these names like Mazgaon or GRSE is the valuation, which continues to remain at a very premium level. And it's just that market interest after the correction. So while the long-term structural story for the India defense continues, I think in the near term, these stocks would oscillate or could remain volatile based on how investors treat them. So at this juncture, I think a lot of these PSU names, including the railways, the defense, and a lot of other public sector enterprises after the correction definitely looks attractive, and hence that buying interest coming up. Tata Group, I think the market paid a homage to Mr. Ratan Tata's departure, and stocks definitely yesterday, a lot of Tata Group stocks did well, and the resultant improvement in Tata holding company. Tata Chemicals, I think the news flows of some of these companies putting up a request with the government for anti-dumping in the soda ash, which the government has taken up. So that news has driven stocks in the soda ash space, especially if you look at Tata Chemicals. So I think overall, PSUs looks good at after the correction, but nonetheless, it could remain a volatile journey from here. Tata Group continues to remain the bellwether in the Indian markets, consistently creating wealth across sectors. And we have been positive in a lot of Tata names. TCS came out with results yesterday, a bit miss, but I would still say that market leader in its space, the best in class execution, and we would be buyers at any dip.
Okay, all right. Before we let you go, Sid, wanted to ask you about IRDA. That's the other name that came out with its set of numbers. The stock was more than 300 rupees. It's seen a bit of a correction. How do you read the numbers? And at 230 rupees, what's your view?
So we don't have coverage on IREDA, unfortunately, but results were very strong, and I think the approval from the insurance regulator for IREDA to get into the B2C segment as well, that would be a key driver for the stock in the near term.